Good afternoon and welcome to today's Smart Investing Briefing. And actually, we're really mixing it up today. We switched sides, so I hope you can
surprise.
handle it. Surprise! Yeah. So we do have a lot to cover today. Chase, let's start off with the jobs report that came out today. Phenomenal numbers. Let's talk about that first.
Oh yeah, and we did a little post on this earlier in the day. I said, jobs, it seems like it's just getting better and better. I mean, look at this. Jobs increased 250,000. I mean, that's a lot of new jobs. I believe the consensus estimate is 190,000, so well above that. Look at this, record employed. That's ever 156 million people. If you look at the employment to population ratio, it's actually the highest since 2008. That's just phenomenal. And finally, the missing picture for a long time has been, wages aren't increasing and so forth. That's not the case right now. Wages are starting to tick up quite nicely. You can see here wages were up about 3.1%. Again, some record numbers, not record, but long time since we've seen this type of wage inflation. Actually, 2009 was the last year we saw this type of increase.
So be sure to go through the Facebook post or social media post because we did write more on that on our post, so more detail there. And also tune in the radio show tomorrow morning. I know you'll be talking more about that as well. Do want to bring up Apple reported earnings and some changes happening on with that company. They are seeing their unit sales slowing. Now earnings were up, but they're no longer going to report unit sales, and I'm kind of concerned about this because they're trying to change their direction.
Yeah, and I'm a little bit less concerned about it than you are, I think.
I'm more conservative.
Yeah, I guess so. Thing we're looking at is they're kind of switching more from hardware to software, or they're trying to appear to switch more from hardware to software.
Right.
Still only about, I think it's 15-16% comes from their service revenue, so they're still a hardware company.
And that's my big concern is that they're trying to get people to look at 16% of their growth, and even though their revenue is increasing because the price of the products are higher, I still say 84% of that company comes from products. You do want to look at those products. So be careful on Apple. Again, they're down, 11%, a high 233, close to 207. It's not a bad company, still a great company, but I think they're changing gears, so be careful on that one.
Still like them, just expensive is kind of what we're saying.
There we go. Yeah, be careful what you pay for any company. Also, let's talk about Amazon. We're kind of hitting on the FANG stocks today. Amazon closed today at $16.65. Now, the 52-week high is $2,050. They lost that $1 trillion market cap, so they're having some problems.
Yeah, and we're not surprised to see this. I think the PE on Amazon now is 132 times earnings, and don't get lulled into this idea that it's down 19% right now. Must be a buying opportunity. We've seen this again with the tech boom and bust. A lot of companies went way too high. People got lulled in. This is a great buying opportunity. It's down 20%. Well, that proceeded to go down about 80-90%, or your money was dead for about 15-16 years. So be very cautious of that one.
And also it drops another $200. That's a big decline when it's $16.60. So as it gets smaller, the declines are bigger. Lastly, same thing with Netflix. They closed at $309, but they're high. $423. They're down 27% from their high. So we seem to see a slowdown in growth investors because they're not paying up for this growth, or the growth is leaving us.
Yeah, and even though Netflix is down drastically, I will go out on record and say it is my most hated FANG stock.
FANG stock, okay.
Yeah, I think Netflix is the worst FANG stock. They have, negative cash flow, debt's increasing. I mean, I think this thing could be much lower in the years to come. So be cautious with these high growth companies because we do think that growth is not going to be as high over the next several years, which is not good for the stock price.
Right. And sorry, we ran out of time, so not time to talk about Google or Facebook. We'll talk about them another time. Hey, and also go to our website, smartinvesting2000.com. We do have a workshop coming up on Thursday right here in Scripps Ranch, so sign up for that. It's almost booked up, but we talk about these things at the workshop if you want to know more about investing. Have a great weekend. We'll talk with you soon.